Hello, traders. Hope everybody had a happy holiday. This is historically one of the slowest weeks of the year between the Christmas and New Year's. But what I have noticed over the last few years is that on the in the week between the New Year's and Christmas, on the Friday and the Monday, or I guess basically the day before New Year's, we have seen a bit of volatility historically, where traders or hedge funds have tried to come in and push the pairs around, taking out stops and so forth, looking to catch traders and maybe push momentum in their side. And of course, we also have the physical cliff issues that could arise, which could create quite a stir in the short term. So let's take a look at what we have here. We have the reason we're looking at a daily chart, which is a little bit convoluted with all the support and resistance levels, is that this level right here, around, let's say, 131.25, is the 0.382 fib from the move all the way down last summer to the 120.60.55 level. So this level, this number, which you can see the pair has bounced off once, twice, and broke through it last week, and will now act as a significant support. Let's go down to a 4-hour chart to get a better view of what we can look at. So this level combined, the 131.28, which is right here, combined with the lows recently at 131.50, this acts as a nice base, a nice support level, which we could see trading bounce off in the short term. Now we also have resistance right up here at 133. So what you're going to be watching, and I'm going to be watching, is just for the price action for ricocheting in between this and to the top and the bottom. Now if we do get a break of these levels, that's where things could get interesting. We could see a push higher or lower, higher level in the short term, a break of 133, and we could probably see a push towards, I would expect, right through 133.80, and we could see a test at the top of the larger range all the way up here at 135. Now if we break back lower, though, between the bottom of this range, that's where things get a little more irritable, and I could expect a push all the way down towards the 50 fib from this range right here to here. I mean the 50 fib, excuse me, that's a bigger 50 fib from the push up also in October up to the 133 level. We have a 50 fib there right at 129.83. So what we're watching for is if we get a break on 133, it could cycle up to a move up towards 135. If we get a break of this 131.50, 131.28 level, though, I would be more likely looking for a push down towards the 130, 129.80 level in this pair. So it's all about these two resistance zones. So the support zone at 131.50, 131.25, and the top at 133. The next pair we're going to take a look at is the Great Britain USD. This pair is a little bit more clear cut. You can see the cross was of course moving higher pretty consistently, and went up to test the 163, broke lower, made it all the way down to 161, which was just below the beginning of the fib range from the lows here off the trend line at 161. Excuse me, 161.25. Now the pair is stuck between 162 and 161. We need a break in either direction. We get a break back above 162, we could see a move up towards 163. If we get a break back below 161, that favors a move towards 160. So we look for 100 pips in either direction. We just need a break of the range in either direction. The Aussie USD, this pair has decided to take a siesta over this break, but it has found a base though from its decline from 105.50. At 103.50, it's found a little bit of resistance. So this 103.50 level is key support, and the 104 level is key resistance. If we get a break of that 103.50 level, we have resistance staggered at 103, 102.60. A break to the top side at 104, we got 104.60. So there's a lot of congestion in this pair, but that doesn't mean we can't just get a big ranging move like we similarly had. If we break to the top side, where's the top of this? It's at 105.50, 103.50, so about 104.50, right about here, we have the 50 fib from this move lower. So what I'm going to be watching, basically, I would favor probably a move to the top side. Well, it's hard to say though with this physical cliff issues. If we break to the top side, I'll look for a move up to those 104.60, 104.50. If we break to the bottom, we can see that we have strong strong daily resistance right around here at 103. So we could see a bit of consolidation in this pair in the short term, or we could see a push up. We have this ascending trend line, but that didn't really act as much as a catalyst in the short term. More interesting pair to look at is New Zealand USD, because this pair, after breaking higher and breaking hearts all along the way, after moving up to 84.50, has basically been in a free fall lower, and now we've come all the way down to break through 82. So what we're going to watch here is this pair in this consolidation, in this range here. We have solid support at 181. Solid resistance at 82.30. You can play the range, which we could continue to kick around, but if we break above 82.30, it favors a move up to 83.50. If we continue to move lower, we could tag all the way down towards the 81. So we'll have to watch these levels and get a hint off some technical indicators. The CAD, similar to the odds, very shallow range between 99.50, 99. We need a break of either side. We get a break of 99.50, parity's in the card. If we break above 99, we could shoot all the way back down towards these lows at 98.28, 98.30. The yen just continues to move higher. It's amazing what you can get with a little bit of political jawboning, and we could see, of course, that it is also, they're trying to change the entire culture over there to beat deflation, which would actually definitely lead to a higher yen. The next major level of resistance I see is at 88, and the bottoms here at 85.50 as its support. I guess there is at the 80, if we want to play the fibs with extensions at 86.10, there's the 127 extension. But what I'm going to be watching is for any move up towards 88, 88, and if we get a break back to 85, I'd like to see it push down to 84 before we push back up to the top side. Let's take a look at a few of the other yen pairs. First being the Aussie yen, you can see it's sitting right here, right above support at 88.60. It looks like our next level of resistance is at 90. I would watch the price action here. If we fall back below, we could see a bit of a retracement. Let's see, the Euro JPY right now is a pretty significant level here at 101.14. And it looks like the pair is fighting with it. A break below above that cycles up to 117. A break below, we could see a push down to 111 again. The Great Britain, this thing continues to move higher, but it has significant resistance right here at 140, which you can see is the top of this range right here from them. Basically, it's the highs from last year, and there could be sellers that emerge at that level depending on the price action. New Zealand JPY consolidating. I'd probably stay away from that, and the CAD JPY just slowly but surely drifting higher. And it is above the 85.70 level, and then it could probably find resistance up here at 87. All right, everybody, good luck trading. Look at the Twitter feed. I might be throwing out some trades in the short term, looking to catch some of these moves on Friday and Monday. And everybody, good luck and have a Happy New Year's.